All right, let's go through the September cattle on feed and monthly slaughter reports that came out. As promised, I threw them in my spreadsheet. Thanks to Snap and a duel off the combine, we're kind of stopped for right now. So here we go. And why cannot? There we go. So the front page or page one, I just want to tell you how silly I think these percentages. Well, not silly, but I tend not to put a lot of faith in them. It says United States cattle on feed up 4%. Um, and this is the highest September 1 inventory since the series began. And you're thinking, oh my gosh, we're going to zero. Um, the only good thing of this, I need a data mine, is the placements and the number of head and the weight classes. I do kind of like that. And I should start data mining that. And I probably will eventually, but because that's going to tell you how many head we have and what time period we're going to have feeding them. So if we have lighter weight cattle coming in, we can expect that our cattle on feed numbers are going to be higher versus if we have heavier weight cattle coming in, we can expect our cattle on feed numbers to creep down faster. So, and I have not even began looking at that, mining all that data yet. So, again, to continue, 3% below 19, and the only bright spot is we're 10% below in disappearance. I guess because we're better at fixing fence this year. So ignore all those numbers. They're just a comparison of the same month last year, and you just don't know what last year was exactly. I mean, did we have a big on feed numbers or small numbers for 19? And what does the usage look on the other end? Okay, so we're selling or we're feeding out 4% more cattle, but are we slaughtering 10% more cattle than normal? I don't know. You got to look at all those things, and I think the percentages is just just something for nervous speculators. In case in point, I'm recording this about 10 o'clock in the morning. So we had a bearish report on Friday, and look what our live cattle futures are doing. And feeders are up too. Let's see. Well, there we go. Yeah. So our cash hasn't traded this week, but our futures are up. So it doesn't make a whole lot of sense sometimes, those percentages. So let's go into the numbers that count. On feed previous 11.2 million, placed a little over 2 million, marketed less than 2 million, disappearance 55,000, on feed grand total this month of 11.394 million, and our current minus previous month over month total increased 110,000 head, and we given us a place to market it at 1.08, bigger than our one mark. Another reason, here's my month over month totals to 2014. So month over month, we're down 642,000 head from 19. So this is just kind of a general pace that we're on feeding cattle. And even though we're 4% higher than September, we're still feeding 642,000 less head on pace for that than we are in 19. 19 saw a reduction in September, but then a big increase 18 was increase, and then final was increase. 17 was a decrease in September, and then a huge increase the last 4 months. And I don't know if the industry really watches this, but I like to watch it because if you start seeing negatives multiple years in a row for sure, you know that um, in 6 months to a year, you're going to get a pretty good opportunity. And 15 and 16 saw reductions in the cattle on feed, and 17, well, the start of 17 saw us jump to $1.40 on a live weight basis. Um, and then we started filling the feedlots, increasing 852,000 head eventually that year. And 18 and 19 saw increases, and we haven't seen even $1.30 cash um, for years, around 2 or 3 years. Futures have gone up that far, but not cash. So I like to watch this number, and this is a good sign. Minus 642,000. I don't expect that to hold, as our feedlots are already full, and we've got a big calf crop coming that getting out of the pasture today, or this right now. So I imagine this is going to increase as we move along. Monthly comparison chart. Again, big number in September. Um, the biggest is said since it started collecting data. And here's the line chart that shows you a 5 and 10-year average. So I put these arrows in because that's going to tell you a seasonal pattern. So what's happening is feedlots are full in the winter, and now we're going to look at getting ready for summer demand. So they're going to throw the cattle in at the packing houses. They're buying, they're slaughtering, getting ready for summer, and so our feedlot numbers are going to go down. And then starting September onward, we're taking calves out of the pastures, throwing them into the feedlot, and then so consequently the feedlot number, or the on feed numbers, are going to increase. You're going to see that every year. This year, we were doing great as far as cattle on feed, and then pandemic hit, and chains stopped rolling in the slaughterhouses, and so now our on feed numbers are going to be high, and until the slaughter numbers improve, it's going to continue to be high, and now we're getting calves in. So it's going to continue to get higher and higher. As a percent of 10-year accumulated, here again, the first start of this year, we were doing great on feed numbers. I really thought 21 was going to be a great a year for us, maybe even the end of this year, but then pandemic hit and percentage of 10-year accumulated started coming up a bunch. This is one of the numbers I use for the supply side in my price barometer. Place numbers were big, not as big as 18 was the record, but still really big. And this chart, the bar line chart, is going to tell you our placements have been big the last August, September. I think they came up earlier than normal because of drought situation and cow calf guys moving their calves in early from pasture. But in the red arrow, you're always going to get bigger placements at the end of the year because of the calves coming from pasture. So you're always going to get that. You just want to see this current placement line less than our averages, and of course they aren't this year. So that too does not bode well for prices. Marketing, September, backed off a little bit. Not a terrible number that we saw like in May and June, but um, not great either. And that's to be expected a little bit, as this chart shows you. So what's happening is retailers are going to start looking for meat to fill the shelves for summer, and so they're going to start marketing for meat, um, and that's why we get a pretty nice uptrend through looks like mid June, July. And then once summer goes away and our demand for our meat um, gets smaller, our marketing numbers are going to get less and less. That's natural. Again, we want to see our current marketings above the averages. We know it's going to go down, but we want to see it um, above what our averages have been. Place versus marketed. This kind of this says the same tale where um, from August on, what's happening is our marketing numbers are going to go down because our demand's less, and our place numbers are going up because the calves are coming, and so we are going to get an uphill or a hill here. Um, the last part of this last part of the year. So what we're just looking for is this line to be less than our averages. We know it's going to go up, but how much it goes up, we don't know. We just want it less than our 5-year average. Okay, it says I have 3 minutes. So this is now, oh, if I can go back, this is killing my pace. Okay, monthly slaughter, head count 2.8 million, live weights 1365, dressed 837, total pounds 2.3 million pounds. Not a great slaughter number compared to other Augusts, and that's not a good sign because we have about a million head less than, or yeah, less slaughtered with about the same amount of cattle as last year. So here our averages are actually even slipped below our 10-year monthly average. That's not good. For the amount of cattle we have in the feedlot to be slaughtered now, we need this average to be huge. Another variable that I use, this is the demand side variable on my price barometer. Percent of 10-year accumulated now is at 100.98, 96.19 of last year. And here's my live weight charts. And again, the arrows suggest the seasonal pattern where we're getting rid of cattle early in the year, January, February on, moving cattle forward faster to get the retailers full up for the summer. And then once calves start coming in and our demand starts getting less and less, of course, we're feeding them longer, we're feeding cattle longer, and so our weights are going to go up. Problem is, what happened this year is our weights started heavier. They were coming down like naturally, and then pandemic hit, and so chains stopped. Now we're feeding all these big cattle longer, and so they're gonna feeding cattle longer is going to add weight, more and more weight, and so we did not see the dip that we normally do see with our slaughter. So we got a problem. I don't know, unless everybody goes out and buys more steak and or our calf crop gets thinner, which I think our calf crop for next year is going to be smaller. That'd be the only way to get us out of this, and it might take a long time. 13 seconds to go, and I guess this report slightly bearish to bearish, and that's what I know.